Assalamualaikum warahmatullahi wabarakatuh. I am Nur Farah Natasha binti Hassan. Would like to present about an introduction about accounting fraud in general. The first one is tone at the top, which means management misstated profit of company. Tone at the top can be defined as the general moral atmosphere and principle that the audit committee, senior management, and the board of directors of an organization has formed. It basically sums up the leadership dedication to morality, honesty, and integrity. Based on the case study Tesco UK 2014, the Tesco accounting scandal offers a potential example of how tone at the top can contribute to an exacerbated corporation mistake. Here are some key points to consider. The first one is pressure for growth. Tesco aggressive expansion plan and ambitious financial target create an intense pressure to perform. This pressure environment, potentially fostered by senior management, could have encouraged employees to prioritize short-term gains over ethical practice. Second one, lacks of transparency. The accounting irregularities involves manipulating revenue recognition practice. This suggests a lack of transparency and open communication from leadership, potentially setting the stage of deception. Lastly, focus on numbers. An overemphasis on financial metrics like profit and share price without balancing with ethical consideration could have signaled to employees that achieving financial goals matter most, regardless of how they were accomplished. Potential evidence of the tone at the top is executive bonuses. Examining the bonus structure and composition package of senior executives during the period can reveal whether they were heavily tied to short-term financial performance, potential incentivizing, manipulation. Asymmetric information. Asymmetric information can be defined and simplified as the circumstance in which two participants to a transaction or contact have uneven access to permanent data. There is an acknowledged imbalance that might influence the interaction result if one side knows more of better than the other. The topic of asymmetric information is multifaceted and has extensive consequences. Navigating a variety of problems in economy, business, and our daily life require an understanding of its dynamic and potential remedies. Asymmetric information based on the Tesco cases. The Tesco accounting scandal also serves as a prime example of the detrimental effect of asymmetric information, where one party holds significantly more information than other, which is management versus investor. Executives include the CEO and CFO has access to crucial internal financial data while investors rely on publicly available information and statements. This information gap allows management to manipulate accounting practice without immediate detection. Second, board of directors versus management. The board tasked with oversight and accountability might not have received full and accurate information from management, hindering their ability to effectively monitor and prevent the fraud. The third one, employees versus management. Lower-level employees involved in revenue recognition may not have fully understood the deceptive practice or led the authority to raise concern without risking repercussion. The consequence of symmetric information. Delay discovered. The fraud remained undetected for months, leading to inflated share price and significant loss for investors who lack access to the true financial picture. Erection of truth. The revelation of symmetric information shattered investor and stakeholder trust in Tesco leadership and financial report. Market inefficiencies. The distorted financial information injected uncertainty into the market, impacted pricing and decision-making across the wider industry. The role and responsibility of the board of directors as mentioned in the agency theory. According to agency theory, the board of directors is essential in assisting the principal agent problems mitigation when the interests of the agent, management and the principal shareholder divide. A problem occurs. Investors trust management with their money to operate the firm, but there is a chance that management will put their own objective ahead of the interests of the shareholder. The board intervenes in this situation. Agency theory argues that a conflict of interest exists between shareholder and management. The board of directors acts as a bridge, monitoring management and ensuring their action align with the shareholders' interests. The responsibility of the boards are duty of care. The board has a duty to exercise reasonable care and diligence of overseeing the company's affairs. These include ensuring robust financial control, internal audit, and risk management systems are in place. Second, duty of loyalty. The board must act in the best interest of the company and its shareholders, putting aside personal interests or conflicts. The last one, duty of oversight. The board is responsible for monitoring management performance, ensuring adherence to legal and ethical guidelines, and holding them accountable for failure. Failure of the Tesco board. Inadequate oversight. The board failed to detect or effectively challenge aggressive accounting practice, potentially due to relying on management report without sufficient independent verification. Lack of skepticism. The board might not have questioned overly ambitious financial target or inconsistency in reported data, potentially indicating a lack of critical thinking and independent judgment. And third one, board composition. Concerns were raised about the board lacks of financial expertise and independence, potentially compromising its ability to effectively monitor complex financial matters. Human bias and personal interest as mentioned in the agency theory. Human bias and personal interest are core terms within agency theory, influencing the dynamic between agents and principal. Human bias refers to the systematic and often acknowledged tendency that affect our judgment and decision. This bias can stem from cognitive limitation, social influence, emotion status, and personal experience. Personal interest dominates the individual self-serving motive that can derive one action. This interest might not necessarily align with the goal of the organization or the principal's best interest. Tesco accounting scandal offers a fertile ground for exploring the roles of human bias and personal interest in corporate misconduct, adding another layer to the agency theory analyzing. Agency theory connection. This human bias and personal interest amplify the conflicts of interest inherent in the agency relationship. They undermine the board's ability to act as objective and effective monitor, creating fertilized ground for unethical behavior to flourish. The potential evidence is board composition, lacks of financial expertise, or divided perspective among board members could point to bias or a blind spot that contributed to the oversight failure. Executive compensation. Analyzing the structure of board member compensation and bonus can shed light on potential incentives that might have influenced their behavior. Internal communication, as meaning board meeting minutes and internal document can reveal evidence of groupthink or reluctance to challenge management decisions. Fiduciary duty of the board of directors. The fiduciary duty of the board of directors is a legal and ethical obligation that holds them accountable for acting in the best interest of the company and its shareholders. This means prioritizing the company's long-term success and financial health while ensuring fair and responsible treatment for all stakeholders. First, duty of care requires the boards to act with the same degree of diligence, prudence, and skill as a reasonably prudent person would in similar circumstances. Duty of loyalty demands that the board avoid any conflict of interest and act with good faith in the best interest of the company and its shareholders. The Tesco accounting scandal of 2014 served a stark reminder of the critical role and responsibility played of the BOD in upholding their fiduciary duty to the company and its stakeholders. Examining the case through the lens of fiduciary duty helps us understand the board's value and highlight areas for improvement. The of fiduciary duty. In the UK, the duties of company directors are primarily governed by the Company Act 2006 and include three main categories. Duty of care. The board must exercise reasonable skills and care in making decisions and overseeing the company's affairs. Duty of loyalty. The board must act in good faith and in the best interest of the company, putting aside interest, affairs, or conflicts. Duty of obedience. The board must comply with the company's article of societies and the law. Breaches of fiduciary duty in the Tesco case. Failure to exercise due diligence. The board regularly fails to adequate scrutinize financial report and accounting practice, potentially missing or ignoring red flags and inconsistency. Lack of effective oversight. The board did not implement robust internal control and risk management system, leading to an environment where fraud practice could go undetected. Blindness to conflicts of interest. The board must not have sufficiently addressed potential conflicts of interest between management and shareholders, compromising their ability to act objectively. Inadequate communication. The board fails to maintain open and transparent communication with shareholders and other stakeholders, hindering the ability to raise concern and hold the board accountable.
Hi, my name is Tasnim Aisha binti Idris and I will present and explain in more detail for question 2, which is asked to explain about the fraud happening in the selected company, which is for our group. We choose to study cases from the company Tesco from UK. How was the fraud perpetrated and concealed? So, from this case, Tesco, which is the supermarket giant in the United Kingdom, UK, had inflated the profits by an estimated 250 million GBP on 22 September 2014. Tesco overstated this amount because of the way it recorded supplier payments. It is shown that the fraud was perpetrated by improperly recognizing income from suppliers, pulling forward income, and also falsifying accounting records. I will explain one by one how this can happen in Tesco. First, Tesco allegedly recognized income from suppliers yearly, which was before goods were shipped or invoice paid. So from this, it clearly shows that it boosted the reported profits for the current period, but it created a future liability. Apart from that, they have overestimated rebates and promotional incentive by inflating the value of expected rebates from suppliers that artificially increase profit. It indicates that Tesco may have manipulated the figures, which is the additional income they get to enhance income and meet targets. 10. Pulling forward income, which it means that whatever the forecast revenue for those products, it is likely to increase because of the pull forward. From this case, they have premature revenue recognition, which is recording sales income for contracts before they were complete, while shifting future income to the current period when Tesco manipulated accounting dates to make income appear to happen early than it actually did. Lastly, the fraud perpetrated by falsifying accounting records when they manipulated documents to support the inflated figures and conceal the true financial state. Not only that, the fraud happened was concealed by limited disclosure where information about the accounting issues was not fully disclosed to auditors or company board members. 10. It was also concealed by internal control bypass, where the internal control procedures were reportedly circumvented to facilitate the fraudulent activities. Lastly, it is concealed by misleading communication, which is prosecution of Tesco suggesting that they have publicly communicated financial results that they knew to be inaccurate. In the same year, in October 2014, Tesco suspended 8 directors, of which 4 executives remained suspended, 1 was reinstated, and 3 left the company. In February 2016, 3 former executives were charged with fraud. First, Kyle Rogbert, UK Finance Director, who was accused of arranging the scheme and pressuring staff. Second, Christopher Bush, UK Managing Director, who was alleged to have failed to correct inaccurate recorded income figures which were published to auditors, other employees, and also the wider market. The last executive is John Schooler, UK Food Commercial Director, who was allegedly involved in manipulating supplier payments. In the case of Tesco UK, the fraud primarily occurred at Tesco headquarters in Cheshire, UK. Next question is asking who is the whistleblower for the fraud that happened in that company. Based on what we have studied about this case, it indicated that whistleblower in Tesco was Amit Soni, who is a senior accountant in Tesco UK finance team. He was considered as a key figure in uncovering the overstatement of profit and exposing the company's financial misstatement. His role was crucial as he identified the discrepancy. According to some sources, Richard Parsons and Aisen Nodiri were also among the other employees who voiced concerns about Tesco's accounting procedures. For question 3, from this case, there are pressures, opportunities, and rationalization of those perpetrating the fraud. For the pressures, there are financial pressures, career concerns, fear of failure, and job security that are associated with perpetrating the fraud. Employees may have felt pressure to falsifying accounting data in order to meet these targets, even though they know that they can engage in fraudulent activities. Subsequently, the executives involved were likely worried about professional reputation. They believed that inflating profits could be seen as a way to ensure their own success. Other than that, it also can create pressures in job security among Tesco employees that make them more vulnerable to engaging in fraudulent activities in an attempt to keep their positions. The opportunities in perpetrating the fraud from this case were weak internal controls, collusion, and also limited oversight. It was discovered that Tesco's internal controls were found to be inadequate that can make it possible for manipulation of financial records and concealment of the fraud. This exactly can make the opportunity for the perpetrators to carry out their scheme without the detection. Other than that, the Tesco case also revealed weaknesses in internal control, specifically insufficient oversight of accounting practice and also lack of segregation of duties. From this case, it does not follow general guidelines for adequate separation of duties to prevent fraud and errors. For the collusion, it created an opportunity for concealment and diminished the likelihood of individual whistleblowing by presence of multiple individuals. Other than that, it also has an effective audit committee. It shows that the audit committee was not aggressive enough in challenging management. For the rationalization, there are short-term benefits where the perpetrators believe the benefits of inflating profits in the short term will outweigh the long-term consequences. They might have rationalized their actions as necessary to secure the company's future and protect jobs. Have self-deception. The perpetrators might have convinced themselves that their actions were ultimately justified by focusing on the positive outcomes they hope to achieve and minimizing the negative consequences. From our opinion, the Tesco accounting scandal highlights the complex interplay of individual motivations, organizational culture, and weak internal controls that can cooperate the fraud. Even though the executives are under understandable pressure, it is ultimately their responsibility to act ethically and within the law. The board of directors also bears responsibility for failing to provide adequate oversight and implementing strong internal controls. This case serves as a reminder that ethical leadership, sturdy internal control, and a strong corporate culture that emphasize ethical behavior are essential in preventing fraud and also building trust among stakeholders. We believe that by examining the pressures, opportunities, and rationalizations involved in the Tesco accounting scandal, can gain valuable insights into the physiology of fraud and take actions to prevent similar incidents from occurring in the future. That's all from me. Thank you, and I will pass to other presenter. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Siti Nurfatia binti Anwazuki. For question 4, consequence or effect or penalty imposed for 5 related identity, which is auditor, company, management, shareholder, and any relevant parties. First of all, we talk about auditor. Auditor involved in the scandal were Deloitte and PwC. The case doesn't explicitly mention consequence for Deloitte. However, given their role as external auditors, they might have faced reputational damage and increased scrutiny. It's common for audit firms to face regulatory reviews and potential legal action in such situation. PwC, as Tesco external auditor, during the scandal, faced significant consequence. They were removed from external audit committee of Tesco plc. This removal indicates a loss of trust and confidence in their ability to effectively audit the company. Next, the company. In this case, Tesco plc faced several consequences, include financial penalties, which is they were alleged to pay 500 million euro fine and suffer a 2 billion euro reduction in its net value, impacting its financial standing. Tesco also faced reputation damage as the scandal affecting its credibility and trustworthiness among shareholders, stakeholders, and general public. Moreover, more than 125 investors filed legal action against Tesco plc, claiming that the company had provided false information to attract funds and investment. Management. As for management of Tesco plc, the 4 senior executive directors were suspended and the CEO, Philip Clark, and Chairman, Richard Broadbent, resigned following the scandal. The CFO resigned just before the scandal broke out. This result loss of leadership for the company. This resignation and dismissals leave vacancy to the key position. Next, shareholders. Shareholders of Tesco plc were affected in financial loss and decreased confidence. Shareholders suffer financial loss due to the fall in the stock price after the incident and the drop in the company's net worth. Additional, because of the accounting scandal, shareholder confidence in the company management and corporate governance was eroded, impacting their trust in the company. Last, any relevant parties. Other relevant parties that affected by the scandal are regulatory bodies and the border market. For the regulatory bodies, scrutinized Tesco plc, leading to review of the company's governance, practice and financial reporting. As for the border market, the incident highlighted weakness in corporate governance, affecting how other companies and investors pre-receive the retail giant.
Hi, my name is Noraini Shaira bin Daslan. I will talk about the conclusion and opinion. Okay, first, for the conclusion, the Tesco accounting scandal was a major incident that occurred in the United Kingdom in 2014. It involves the biggest retailer in the nation overstating its profit by 263 million as a result of making premature contractual agreements with suppliers. The fraud had far-reaching effects on Tesco, including a sharp decline in its share price, a decline in consumer confidence, and transactions from authorized. Okay. Executive of the company were subject to an investigation by the Financial Conduct Authority. Investigation the situation. Tesco violate listing regulation and transparency principle according to the FCA, and the company cultures place profits above compliance to accounting standard. Tesco was penalized 129 million by the authority for abusing the market, and it was also required to make up for lost investment. In connection with the scandal, 3 senior Tesco executives have been charged of fraud and false accounting. The judge decided that there was insufficient evidence to proceed, caused the case against the 3 executives to be dismissed in 2018. Despite this, Tesco was significantly impacted by the scandal, which also brought attention to the value of moral behavior and compliance to accounting standards, and dropped the demands for increased transparency and regulatory control in the retail industry. In response to the scandal, Tesco implemented a number of measures to strengthen internal controls and compliance procedures. To restore confidence and transparency, the company hired new leaders to supervise its finance and accounting operation, established a whistleblowing hotline to encourage staff members to voice any concern about accounting procedure, and enhance it and engagement with investor and other stakeholders. For the opinion, this case highlight the importance of transparency and accountability in corporate accounting practice. Companies have an obligation to honestly disclose their financial information, and when they act fraudulently, they endorse to not only the interests of their clients and investors, but also trust of the larger business community. Okay. The Tesco fraud case underscore the importance of strong regulatory oversight to ensure that companies are adhering to ethical and legal standards. While the penalties Tesco faced were significant, it's possible that more stringent regulation and enforcement could have prevented the fraud from occurring in the first place. As such, we need to continually assess and improve our regulatory frameworks to promote ethical behavior in the business world. Next step. Okay. Last for the review, I'll lesson learned from the assignment. Okay. We discovered a few things as a result of the assignment. First, the Tesco UK fraud case in 2014 served as a reminder of the need of having effective internal controls and risk management procedure. Um, it was discovered in the Tesco case that senior management had altered the company accountant process in order to execute earnings, pointing to a breakdown in internal controls. To reduce fraud, business should examine and upgrade their internal control system often. Second, the case highlight the importance of ethical leadership and corporate governance, which is the fraud was perpetrated by senior management manager who placed undue pressure on their subordinates to meet unrealistic profit target. This culture of unethical behavior was allowed to flourish due to a lack of proper oversight and governance. Business should ensure that their leaders are committed to upholding ethical standards and that there is adequate oversight to prevent the abuse of power. Um, Last, the case underscores the importance of transparency and accountability in financial reporting. Tesco failure to disclose the accounting irregularities to the market result in a loss of investor confidence and a significant drop in share price. It is essentially for business to maintain accurate and transparent financial reporting to maintain the trust of their stakeholders. This requires regular audits, robust reporting procedure, and a commitment to disclosing any irregulation. Okay, last for the wisdom. One piece of wisdom I would like to share regarding the Tesco UK fraud case is that companies should prioritize ethical behavior over short-term profits. The fraud occurred because senior manager put undue pressure on their subordinates to meet unrealistic profit target, leading to unethical behavior and ultimately financial misconduct. This serves as a reminder that ethical behavior and long-term sustainability should be at the forefront of any business strategy rather than short-term gains at the expense of ethical standard. By prioritizing ethical behavior, business can build trust with their stakeholder and ensure long-term success. That's all for me. Thank you.